Hey all, welcome to ShareTreck. This is Raj here. Friends, today we start as always at the CNBC homepage. And here we have the indices. All of them look mildly positive. NASDAQ is very positive. And I think we are getting into a time of volatility. There are some headlines out here and also a chart that I would like to use to explain what I am thinking today. If you look at the headline here, it says Trump says a little disturbance from tariffs is okay as market reels from trade war fears. So basically, everyone was thinking that Trump is going to do something to turn the market around. I think that we may end up having a bounce in the market thanks to what the White House does. But it would not be because they want to bring up the market. I would like to show you another headline out here which says weekly mortgage demand surges 20% higher after interest rates drop to the lowest since last year. So this, along with another soundbite that comes from Scott Bessent, is basically that they are looking at lowering the 10-year yields. And if they go ahead and lower the 10-year yields, that is going to be good for the home market because mortgages can be available much easily. Qualification for mortgages will become easier, and that housing affordability can push the market and the economy up. So that's the direction in which they are going. And we also had news that Trump could scale back Canada-Mexico tariffs Wednesday. So this does not include the reciprocal tariffs. This does not include the China tariffs. And this is not even a done deal right now. But the way the whole thing was positioned was that Trump is a reasonable man and he's going to listen to them and he's going to tell them that you come halfway, I'll come halfway, and we'll settle on something. So this is a classic old-timers negotiation thing. And I'm thinking that probably later today, we might get okay. We have reduced the tariffs. I don't know whether the tariffs are going to be removed totally or they'll be just disallowed for the automobile sector because that's where the maximum damage could happen. But Trump still has to address China's tariffs because they would be very heavy on the agricultural sector, which are basically Trump's voters out there. And they already suffered last time, and the government had to give them around $2 billion in assistance. And at that time also they said, we don't want a handout. We want to make a decent living. And therefore, I think that Trump will also have to look at China tariffs, and that may be the second shoe to drop later on. So all of those things could give a momentary jump to the indices. Hi, Aaron. It will all give a little bit of a boost to the indices. And as such, hi hot dog. And as such, I think that we'll have a very volatile week to contend with. So those of you who missed what I mentioned earlier, what I'm saying is that Trump market was expecting that that Trump would be sensitive to share market falling and he'll do something to pick it up. But I'm thinking that it's going the other way around. Because we have this article out here. I'm going to just take a few minutes to show this. Scott Bessent saying that we want to look at yields getting lower. And then if you look at this headline here, it says weekly mortgage demand surges 20% higher after interest rates go lower. So if the housing market improves and if the refinancing becomes much better and people sitting on inventories on their own house because they can't afford to get a new mortgage at a higher rate, all those movements could get started. And also line of credit will start acting as an ATM. And the market will get juiced, the economy will get juiced. So I think Trump is going in that angle. However, the side effect of that could be felt in the market in terms of increased demand, stronger employment, and so on and so forth. But that's a longer term play. We don't know if he's going to be successful in keeping the yields lower for a long period of time. For that, they have already reduced the bond purchases, and they are making sure that the bond market can cool off a little bit, but how long it will last, we don't know. There's another aspect going on. Trump could scale back Canada-Mexico tariffs Wednesday. So the positioning is that, okay, Trump is an old-time negotiator. He's saying, okay, we have had enough. Now you come halfway, I'll come halfway. We'll settle somewhere in the middle. That's a classic negotiation. So probably they're looking at something like that. I don't know what it's going to look like. It could have a sectoral boost, because if he says that I'm going to exclude automobiles from the tariff, if that is the concession he's making to save the automobile sector, which is where maximum complication is there, then probably the auto sector and that area will start jumping up. But what about the other areas? So we don't know all the details, and we are not sure whether it will come this evening or it may come tomorrow. So we have to be careful. The market will be whipsawing a lot, and around 10 o'clock, I think we are going to have another piece of information, which is the ISM Services PMI. That also has a potential to move the markets. So I'm thinking that there is going to be bounce back, and then there is going to be drop back as well. So overall, it's a very muddled situation. So all we can do at the very best is just to react to opportunities that come our way and move with the trend, which means being in front of the trading screen and buying and selling within the day, like it's like a day trader's thing. So that's what I'm visualizing today. And if I was to go in and have a look at our futures, you will see that Nasdaq futures is up 0.56%, but we are still firmly below 20,664. Right now we are at 20,518. MACD is bearish. Momentum is also below average, and there's plenty of room on the RSI to go down. What saved us was this 200-day exponential moving average, and also I think there was a lot of buying during the day. I don't know what triggered that buying. I think that Google was at a very attractive valuation, Nvidia was at a very attractive valuation, and people just piled into it. And towards the last 30 minutes of the market, there was a huge amount of sales happening, and I have my theory about that. I'll talk about it when we look at our indices. Now you have S&P 500 futures, it's up 0.39% in pre-market action. It's at 5,812. And we have out here a resistance which is at 5,817.5. So we are just slightly below that, but we still have this gap fill which is going to attract us. Remember, we have also touched the 21-day exponential moving average. In a bull market, generally, you find yourself much away from the 200-day exponential moving average, and this is like a reversal to mean. And is there a possibility for us to fall down further? I think the risk of falling down further is much higher than the risk of going up, because MACD is very bearish and momentum is also very weak, and we are very close to the oversold area. A dead cat bounce is possible, but in the past, if you go back and have a look at this index, we have gone below 30% as well. So I think we are very close to a point where we may turn around. We could probably bounce back today, break through all these things, and then hit this diagonal line of resistance to test it. Or we may come back here to retest the support which we have at 5,738.00, and in the process we will also test the 200-day exponential, which will be above it. So it's going to be very strong support here. So breaking down below this seems to be difficult, but there is a good chance that it could happen today. So we have to be careful about that. Then I'm going to look at the 10-year yields. As you can see, the 10-year yield is constantly coming down. Okay, we have had a little bit of consolidation out here, but the explicit direction that the White House is trying to go is to have lower yields, so that for them to refinance the bonds, it will become cheaper. And also this has a side effect for small businesses and others because they can get cheaper loans. So overall, the bond yield going down would be much better for the economy as such. But how long this diagonal line of resistance will hold is not clear, because we can see that the MACD is mending and also momentum is picking up, but momentum is not giving a decisive upward direction. It's a little bit flat and below average. So it's very difficult to say what's going to happen out here. But the intention is definitely there to keep on pushing this down, so that the debt servicing becomes inexpensive, which is a top priority, because either you pay the debt or you service the debt, and there is 32 trillions out there, and that has got to be serviced. So this angle seems to be more convincing to me. And of course, we have the cup and handle target, which has formed over a long period of time, which is aiming at 5.30. So that pull is always there. So let us see what happens out here. Now, next, I want to go on to have a look at the indicators, and let's look at Dow Jones. Now, Dow Jones broke down yesterday significantly below our support of 42,913. I'm going to mark this red. And then it broke down another support of 42,546. And right now we're at 42,521. So we are just below this, and we have broken down. So I'm going to convert this into a resistance out here. And we have not yet touched the 200-day exponential moving average out here. But if you look at the MACD and the momentum, they are all looking really red. Now, I want to talk about another aspect as well out here. And it's not very, very clear in Dow Jones, but if you look at S&P 500, good morning, Inf. If you look at S&P 500, I have drawn these lines of divergence. So I think this is a bearish divergence that I see on S&P 500, and it seems that MACD is really bearish, and momentum is also dropping very close to being overbought. And we are very close to the 200-day exponential moving average. Mean reversal is happening out here, and we have broken down all our support so far. So this is gone, and the other support, which was there at 5,841, pushed us back yesterday. And today in pre-market, we are down 1.22%. So I think that we are going to test the 200-day exponential out here, and this bearish divergence is coming to play. If you look at Russell Index, you can see that we are already below the 200-day exponential moving average, and we are in the process of forming a death cross out here. And we have this doji candle. I would say it's a long leg doji, lot of indecision out here, what to be done. And we are seeing that MACD is absolutely bearish, and we are just very close to this line of support that we have on the RSI scale from where we have bounced off in the past. So I think a dead cat bounce could be in order for IWM, and also the reducing yields on the bonds could help IWM a lot. So that's what I'm thinking could probably happen today. Right now, pre-market, we are already up 0.71%, and I think we are going to test the resistance at 210.00. Now, next, let's go on to NASDAQ. NASDAQ again has got a kind of bearish divergence in my opinion, and we already had a serious drop out here, and we have this diagonal line of resistance from an earlier bull flag, and that is definitely giving a resistance. That gave resistance yesterday, and we fell below this horizontal line of support, which was at 20,352. And today I'm going to mark this red, and we will see what happens when the market opens. But we definitely had a lot of selling yesterday, and let me go to a 5-minute chart out here and reorder everything, and you will see that we had a whole lot of selling starting at 325 onwards, and it kept on going until the end of the market. So what I think happened here is that mutual funds and big institutional investors, especially mutual funds and those who for whom it's very important that the purchase price and the closing price for the day matches, those kind of institutions all did a whole lot of selling out here. That's what I think, because if you look at retail investors, they have been buying and pushing the market up. And this is the point where I think institutional investors sold. And why did they sell? If I'm right, then the question is, why did they sell out here? Right? So if they sold out here, and this little bit of extra out here would have come when they were trying to finish off their entire sales, maybe they did not manage to sell everything that they wanted to sell out here. So if it was a sale, then I think today's prognosis is also going to be negative, and probably we'll see that towards the end of the day, because if the institutions want to sell, they would like the prices to go up, and then they would like to do the sales at a peak and start selling from there until their price target is achieved. So I'm thinking that we have got a negative bias for today, but there will be a little bit of positive bias because Trump is saying that he's going to come up with a tariff deal with Mexico and Canada, which is what actually caused the whole thing to fall in the first place. So reversal of that could give at least a partial retrace. So that's why, my friends, today I'm very confused. I don't know what's going to happen with the overall market. And if I look at put call ratio for guidance, I can see that the put call ratio is absolutely neutral. I would say 0.91 is as good as 1. So it's neutral, and VIX is going up 0.72% today. And I think one of the things that we see here is that as VIX keeps on going up, share market prices will keep on going down. And have we reached the peak? No. The past VIX has gone all the way up to 81.04. But at the same time, 70% is the standard threshold for being overbought. And therefore, I think there could be a potential for VIX to drop, especially if we get definitive news today that tariffs are being rolled back. So it's very confusing. Honestly, I'll confess to you, I don't know what's going to happen in the market today. And let's go and have a look at gold. Gold is also having a kind of range-bound trading. It's neither too negative and it's not positive. It's just poised to see which direction to go. So we don't have anything out here. MACD is mending. Momentum is also above average. I was of the opinion that we will touch this support here at 2,792 before trying to go to 3,000. I don't know if that's going to happen. Again, no clear idea out here. Now let's go on and have a look at the comment section. So Aaron, good morning. I'll be back. What's the death cross again? Aaron says definitely depends on any announcements from Trump. Yeah, that is a challenge out here. Trump can do anything. And you know what? I also have a feeling that if I look back to his first term, in the second term, I think anybody closer to the Trump orbit who knows what's going to happen can make a killing in the market, because I don't think Trump is going to be very keeping the cards close to his chest. He must be bragging to people around him what he's going to do. So based on that, many people closer there, knowingly or unknowingly, they can make a lot of money in the options business, putting less money and making a lot. So basically, if some journalist is out there looking at the people in Trump's orbit and checking their assets at this point of time, and then seeing what happens when the administration is over and they come out and see how much assets they have, you'll definitely find people who made money out there. DV is saying, looks like everybody's expecting a small bounce. Absolutely. There will be a small bounce for sure. But what is worrying me is the fact that in the last 30 minutes, institutions sold. If that assumption of mine is, comes out true, then we'll have an opportunity where the market is going to be zigzagging. Day traders could make money, but it's very difficult to make a definitive call. So some people feel there's going to be a bounce. Others feel that it could drop down, because if Trump doesn't come up with what he promised, that he's going to settle down on and come with a deal for the tariffs by Wednesday, that's what they said. After being very, very rigid just a few hours before. So then the market can go down. So anything can happen. It's very confusing, unfortunately. Let's go on and have a look at our other stocks. What is your opinion on crypto space in all this? Aaron, I think crypto is very closely linked to the stock market. Earlier, I used to be of the opinion that crypto would be a kind of risk-averse asset. And if people got worried, crypto will behave like a haven for people fleeing from risk. If that was the case, crypto would have gone up now. But in the last so many months, I have seen crypto is falling lockstep with the stock market. When the stock market goes down, crypto goes down. Stock market goes up, crypto goes up. So I'm thinking that crypto is not going to be of any assistance. The second aspect I would like to point out is that there is more integration of crypto with our stock market and the financial institutions. So the behaviors and the traits of the financial institutions are starting to manifest in the crypto space. For example, you got so many ETFs out there, you got futures out there, and all of those things are actually distorting the native instincts of crypto. And I'm thinking that it's more and more getting correlated with the stock market rather than being a store of value and during times of inflation. That's what I'm thinking. Please share your thoughts as well, because guys, I'm also a retail investor like yourself, and I would like to hear your opinion as well. We'll also check out crypto before we end the live stream and see if the correlation still remains. Now, that said, let's look at Nvidia. This was one of the stocks which I said was looking very attractive on the PE. So we had a huge jump yesterday, but we were still below this diagonal line of resistance from a previous bear channel. And we have this huge area of support, which is going to give a lot of support. And we have at the bottom of it a support at 106.91. So for Nvidia to break down below this, it's going to be very, very difficult. However, if you look at the MACD, it is still very bearish. And earlier, I had drawn divergence out here, and this seems to me to be a little bit of a bullish divergence because the prices are falling faster than the RSI indicates. So I'm thinking that we are going to stay below this diagonal line of resistance for a few more days before we break through above that. Today already in the morning we are at 1.54. So the most interesting thing for me today with Nvidia would be to see that we break through this diagonal line of support. We are already below the 21-day exponential. We are also below the 200-day exponential. So definitely the stock is bearish at this point of time. But having had a lot of drops so far, it's only fair to see a little bit of a jump because a new lower low has been established. So I think the time for going up also is coming out there, and the PEs being so low, I think people might like to buy a little bit more, assuming that the bottom has already been achieved. But somewhere down the line, institutions might come in and then push things down. That's what I am thinking. So Aaron is saying the SPX 100-year resistance line is certainly coinciding, but there's a little room to push the S&P up. Yeah, I think S&P could go up if we have this tariff deal on Wednesday. So that itself will push us up. So now NVIDIA is done. AMD. I think AMD is going to be held below this diagonal line of resistance. It's up 0.74% today. MACD is mending, but as I always say when I do the genomics, the momentum is still very low. It has to go above average for it to mean anything. So I'm thinking that maybe there are a little bit of gains. The test will be for it to cross this diagonal line of resistance. And if it does that, I'm going to short AMD because I am thinking that it's going to come down again. That said, we have got Intel, which is also dropping. MACD is bearish and momentum is also below average. So the chart is weak. It's below all the exponential moving averages. So that's not good. And SMCI is up 3.04%. I am thinking that SMCI should get some movement up and start challenging 42.80, which is also coinciding with the 21-day exponential, because all the negatives have been priced into SMCI and the positives, I think, have not been fully priced in. And therefore, I'm expecting it to go back to 64, but how long it will take, I don't know. I'm thinking that SMCI should definitely pick up a little bit today, and I'm looking at Meta next. And if I see Meta, it's fallen below this diagonal line of resistance, and it came from the previous bull channel. So we are not yet into it. So that will be the first test for us. If I look at the MACD and the momentum, they are looking really bad. But when you look at the PE is looking more decent at this point of time as compared to when it was up there. So it's going to attract a lot of bottom fishers. And of course, we have a support at 636.70, which will definitely hold for Meta, at least for today. That's my expectation. And Hot Dog says crypto will be a safe haven when it gets another 10 trillion market cap. Oh, yes, it needs more market cap, but how will it get that? That's the question, right? Yeah, we'll come back to that. Let us look at Microsoft. Microsoft had converted 386.90 into a support, and this morning it seems that that support is going to remain because we are up 0.36%. But if you look at the MACD and the momentum, it's looking really crappy, but PE has improved significantly. Again, a lot of bottom fishers are going to say, okay, there could be a turnaround anytime now. We almost dropped a lot, almost close to 10%. So I think it's time for me to start dollar cost averaging. So the dollar cost averaging action in the MAG 5s will start showing themselves as the zigzag that we are seeing, a green candle, red candle, green candle, red candle, green candle, red candle, until we have a total turnaround that comes in after the market capitulates. So I've also started dollar cost averaging. I had placed order for Google, but I couldn't get Google. I got Microsoft, and I got another stock, Nvidia. So those two I got. Again, I'm going to do some pre-market orders to try and see if I can get something on the cheap. But usually in the pre-market, you can't be guaranteed that it will be cheap. There are less players out there, and the institutionals do not come in there. So there are times when you can really get a good steal out there if you know what you're looking for. So I think I'm going to look at the pre-market and see if I can pick up any of the MAG 5 cheap. And if I can, I'll do the dollar cost averaging in the pre-market session itself. Then we look at Apple. Apple is up 0.30% today, and it's trying to get back into this diagonal line of support from before. But you can see the strength of the bears because they have broken through all these diagonals, and the MACD is bearish and momentum is also dropping. And there's plenty of room on the RSI for it to go down. So I'm not sure that Apple is going to hold on, because when Trump talks about coming to a deal with both Canada and Mexico, and there is no word about China, I think definitely China-related aspects will have a negative dent, especially for companies which have a footprint in China. Illumina comes to mind because Illumina has been singled out and it has been blacklisted. So all China sales for Illumina is now going to be blocked. But then again, like you heard on Nvidia, the black market will definitely buy and get the things into China. So that is definitely there, but the market is going to respond to that. And the same thing applies to Apple as well. Apple has a decent market out there and also manufacturing out there. So one of the positives for Apple out there could be that they will manufacture in China and sell in China, therefore no tariffs. So that could be one positive aspect. But at the same time, if the Chinese government and the Chinese people become anti-US, then they could boycott it, just like the Canadians were boycotting American products when the tariffs were announced. So those factors remain for companies with a huge China exposure, and Apple is one of them. Then coming to Amazon, we can see that Amazon also has got a good PE. There could be those dollar cost averaging happening, and we fell below the 200-day exponential yesterday, and we sharply bounced back up, but we were not able to clear and go into yesterday's low. But this morning we are managing to go there. This morning we are up 0.65%. We are at 205.12, which kind of coincides with where we ended the previous day, the day before. And if we manage to go above that, then I think we could see a trend reversal happening, and that would be a positive thing. And we can then target to take out 207.87 and convert that into a support. We are also at the bottom, so there could be a dead cat bounce as well, or a trend reversal happening out there. But in the past, we have gone all the way down to somewhere around 26.47. If you go down further, we have gone all the way to 21.80 on the RSI scale. So at this point of time, I'm not very confident that we are going to go up, because we could equally go down as well somewhere during the market. So maybe the first hour is all going up and then it comes down, and maybe in the last half hour we go up again. I don't know. It's all over the place today, friends. I'm sorry. I'll confess that I don't know what's happening today. And then if you look at Tesla, it's up 1.62%. And yesterday I sold off the Tesla shorts that I had. And I'm in neutral position right now. And I'm thinking that Tesla could have a turnaround if possible, because the reason I sold out is because we have the RSI below the oversold area. So that's my first level of caution. And given my risk profile, I don't want to hold on. But in the past, Tesla has gone all the way to 17.08 on the RSI scale, so it can still go down there further. So further downside is possible. There was a very narrow range-based trading with a long doji out there, so a lot of uncertainties. People don't know what the hell is happening out there. And we have a support at 268.87. If the 268 68.87 is taken out, I think that we are going to go in for this mega gap fill. There's a gap fill on the way up, and there's a gap fill on the way down out here. So all of this has to be taken care of. So we will have a little bit of a support out here. And if we break this support, I'm going to just draw this line of support out here. So this support for Tesla is going to be at 241.59. And if we break down from there, we are doing the gap fill. So all those potential are there. Even the reverse head and shoulder target is there, which takes us all the way up to 225.82. And if we go to 225.82, why not go a little bit lower and finish this gap fill? So I'm thinking that there's plenty of negatives for Tesla, but given my risk profile, I don't have the conviction or the courage to hold the shorts for that long. So I bailed out, but I might get back into the shorts if one of these supports are breached. And we go on to Google. Google has a smart recovery, as you can see out here. I'm just going to recalibrate the chart so that we can see the charts much clearer. So you can see this is a huge sell zone. We came back into it and we got pushed down again. And this morning again, we are back into the sell zone. We are somewhere out here and we are trying to challenge the 200-day exponential moving average. MACD is repairing itself. We bounced off. As you can see, we clearly bounced off 26.26 out here. And then we are on our way back up again. So today, I think that it's going to be a very challenging day for Google. And we are going to probably end up inside this area, or we can get pushed back down again, in which case the support is going to be 169.10. So that's what I have out here for you guys. Qualcomm is up 0.56% and it's below this diagonal line of resistance. And if you are asking what is a death cross, so you can see a death cross out here. A short-term exponential moving average crosses over a longer-term exponential moving average. That's a death cross. And this is a golden cross out here, a short-term crossing over a longer-term exponential moving average. That's a golden cross. Golden cross is bullish, and death cross is bearish. So we have the bearish signal already triggered out here. And I think that Qualcomm is going to probably give up all the gains later on today, unless we have some positive catalyst coming out there. Next, let's go and have a look at Broadcom. Broadcom is up 1.63%, and we have had a support at 198.64, which became a resistance, and I forgot to mark that out. But we are marching towards that. We had a doji candle out here, a lot of indecision, and we were pushed up by the 200-day exponential moving average. MACD is bearish, momentum is below average. We are very close to being oversold. But let me go ahead and have a look at the past record. And in the past, we don't seem to have gone all the way up to 30%. So I'm thinking that Broadcom could definitely have a bounce back at this point of time because this is as low as we have ever been on the RSI chart. And we could still go down a little bit, maybe 2.14%, so that the classical 30% could be a bounce off point. But right now, given the 1.16% jump in the pre-market, I am thinking Broadcom is ready to jump up and challenge the resistance at 198.64. Palantir, again, it's very richly valued despite all the drops, and it's up 2.55% in pre-market trades, and it has converted a resistance of 83.68 into a support. And the good thing out here for Palantir is that it has covered this gap up, and this gap up is no longer going to act as a magnet. So that part is liberated, and we have a series of support out here. So Palantir is also repairing its MACD, and we also have momentum picking up. So Inf is saying that we got some economic data. Let's go and have a look at the economic data that has come in. ISM Services PMI. Let us see. It's 10 o'clock. It's 10 o'clock is when it's going to come. So now let's look at the other shares that we want to see. SMH, which is a semiconductor ETF. It's also shown a sharp gain, and it's up 1.14%, but MACD and momentum need to improve a lot. So I think that it could give up those gains. All the pre-market, we can never believe the pre-market 100%. So maybe the first 5-10 minutes or an hour, it may be up, and then it could probably come down. Everything can change with whatever the White House says. They have the cards, as Trump likes to say. And then let's go and have a look at what are the other stocks we want to look at? There has been a little bit of movement on quantum. Quantum is starting to improve. Quantum ETF also has shown improvement. So Rigetti was up 2.08%, and this morning it has dropped 0.51%. SMR was up 11.52% yesterday. Today again it's up 3.19%, and it's facing a challenge with this diagonal line of resistance. The positive aspect for SMR is it has crossed the 200-day exponential, which is a very good point. But if you recollect, in the last 3 sessions, we have been to and fro through the 200-day exponential, but I'll still take this positive. I would like to see SMR break through this diagonal line of resistance and convert that into a support, in which case it will be in a bull channel. And MACD is repairing itself and momentum is picking up, so hopefully that could be something that can happen. And power is always needed for all the data centers and everything, so SMR going up seems logical to me. AV is down 22.06%, and it's very confusing for me when I look at AV and look at Palantir. Both are going to benefit from the government sector, and government is cutting costs. So these are all purely sentimental trades. I don't want to go with any pre-market action blindly. Let us see if there is any new market data that's coming up out here. AeroVironment is maintained at outperformed by Baird, and that does not coordinate with what we see happening in the pre-market session. This was 21 minutes ago. So there must be something negative out here which we are missing. Let's see. Is there something for AV? I don't see anything out here. Defense contractor AeroVironment was plunging 20% after issuing weak fiscal year guidance. The company expects revenue of 780 million to 795 million, down from prior guidance of about 810 million and below Wall Street estimates of 820 million. Adjusted earnings were forecast at 2.92 to 3.13 a share, below analyst expectation of 3.43. Trump's wavering support for Ukraine has pressured shares of AeroVironment, which is a large supplier of guided munitions to Ukraine. This makes perfect sense. So I think that AV definitely is coming down. It may lose further, and the pre-market drop I think is justified, but I think that there could be a bounce back for AV because 22% drop is very, very significant considering the miss that we have had. I think there will be some gains for AV later on during the day. And then what do we have here? Let's go on and have a look at genomics, which is what most of our subscribers come in for. So Verve Therapeutics is up 3.92%, and it's looking very healthy out here because it has taken out previous day's drop. I mean, day before yesterday we had a huge drop, and that has been taken out. MACD is mending, momentum is also picking up, but it all depends on the overall environment. And as long as the tariff talks are not tamped down, I think genomics is going to be weak, and we can't be assured that anything that is going up will not come down. And we have here the formation of the first death cross out here, which is a bearish indicator. So I'll wait and watch. I will not react right now. I'll react only after I see some kind of confirmations in the charts. And let's look at Ginkgo Bioworks, 3.69% gain in the pre-market session. I'm happy with these gains, don't get me wrong, because we have had a whole lot of drops. So it's going to be a dead cat bounce kind of a situation. But Ginkgo Bioworks in the past has gone further down before bouncing back. And also we have an environment where I don't think government is going to spend a lot of money on virus surveillance and those kind of things. In fact, DOGE has already closed down FDA's testing labs. So they have closed the lease for many of those offices. So we still don't have news whether they have all been consolidated into lesser number of offices to save costs. I don't know. But definitely with that kind of indication, I don't see Ginkgo Bioworks gaining anything anytime soon. So that's my bearishness on Ginkgo Bioworks. And then if you look at Caribou Biosciences, it's flat in pre-trade market. Chart is also looking very weak, but it's primed for a dead cat bounce. And it could probably go sideways and then bounce back up again. And then we have CRISPR Therapeutics, which is something I'm watching very closely. It's down. It's down significantly from where it was in the past. And I think our reverse head and shoulder target after being met, we have had no new bullish catalyst as such, no golden crosses, no other indications. All the genomic stocks have been falling significantly. And that is in line with the fears for the economy, the fears of the tariff. And if the tariff fears are removed, I think we could easily regain at least half of this, and then we'll have a challenge to convert the 200-day exponential moving average. So I think it's all Trump dependent. If the tariff fears are tamped down, most of these stocks could do very well. Grail is up 2.44. I wouldn't think that it's going to last for a long period of time, but you can always look at companies like Grail and CRISPR Therapeutics to be the stronger points in this watch list. So from that point of view, if I look at momentum, it's above average. So I would say among all the stocks out here, Grail probably could stay positive during the day. And then we look at Prime, which is down 4.31%, very weak on the charts in a bear channel, below all the moving averages. Beam is up 0.61% in pre-market trade. It's still below all our 21-day exponential moving averages, and the resistance is at 29.91, and also we are below the 200-day exponential moving average. Today we may try to break above that, but overall if you look at the MACD and the momentum, it doesn't seem like it's going to be that easy. But if Trump does talk about the tariffs in a positive way, then things are going to pick up and we'll easily break through this 200-day exponential moving average. Then let's look at Altimmune. It's up 2.35%, and we still have a resistance out here at 6.22, which is what it's going to challenge and try to take out. And I don't see any encouragement from the MACD and the momentum, so I'll wait and watch what happens out here on this counter. Otherwise, we are still in a bear channel out here. Next, let us look at Bluebird Bio, which is up 4.71%. It's exactly at $4. And we have we have the MACD, which is trying to mend itself, and momentum has fallen below where it had been in the past. And now I'm going to adjust this momentum out here and take it to 20.92. So it could go as low as 20.92 before bouncing up. So a dead cat bounce is possible anytime out here. Probably what we are seeing here is a dead cat bounce, and then we could probably end up with a red candle for the day for Bluebird. Allogene is up 2.63%, and it's still below the 200-day exponential moving average. MACD is bearish, but momentum is starting to pick up. So I'm thinking that today we may take out the 21-day exponential moving average with Allogene. And mRNA is up 7.54%, a very smart gain. Is there something in the news? The fact of the day: Moderna's shares increased by 9.2% to 33.19 in pre-market trading after CEO Stephanie Bancel acquired approximately 160,000 shares at around 31 each. Oh, okay. She acquired shares, so it's going up. Okay. The owner eats in his own restaurant, so the food quality should be good. That's the sentiment at work out here. But if you look at the point out here, you can see that there was some kind of a support. So I'm thinking there's a new support out here for mRNA at 29.71. But today's gain, I think it can easily give up if tariff issues continue. ARCG has converted a support at 22.94 and continues to move upwards, but MACD has not yet improved, but momentum is picking up. Again, nothing predictable in the market today. I would look at Vertex next. I think let's look at Illumina and then Vertex. Illumina, I think I'm going to convert this region into a region of resistance or volume of sales available. So this is going to be very hard for Illumina to break through. But today, having gone to the bottom, Illumina is probably doing a dead cat bounce. And if we manage to clear this red candle out here from the past, I would be really happy that we are potentially setting up for a trend reversal. We'll check it out when we look at the stock again tomorrow. And then let's look at Vertex, which still happens to be in the bull channel. And as expected, it's consolidating sideways, and it's moving towards the diagonal line of support of the bull channel. That is the chart that I want to show you guys. And that chart, this is the seasonality chart that I wanted to talk to you about. I got it out on Google. So this is the chart out here. This is coming from Almanac Trader, and I was trying to see what happens with the presidential years post-election. So this black line out here is all post-election years S&P 500 pattern. We are definitely not in that pattern. And then we have this pink line which says incumbent party loses. Incumbent party was the Democrats and they lost. So when they lose, then this pink line is what we are supposed to follow. We did not follow that. We got elevated, but we had a similar pattern at an elevated level, and this drop that you saw here has been magnified, and we are more or less aligned back to where we were. So if I go according to this chart, then I think that we have got to have a couple of bumps out here, and then we will pick up. So I'm thinking that there is going to be a bump up today and then a bump down. So that's the way I interpret this chart and the trajectory at which we are going. Of course, all of these are my personal opinion and projections as a retail investor. I would like to take a few minutes to hear from you guys to think about what you think is going to happen today. And I'm focusing more on the Mag 5, Apple, Google, Nvidia, and those kind of stocks. So can any of you share your thoughts with me, what you think is going to happen in the market today and any of your theories? Just like to wait a few minutes and see the comment section. I know that it takes a little while for your comments to reach to me, so I'm gonna watch a little bit and then we will call it a day. And as promised, before calling it a day, let's go to look at crypto. So let's answer the crypto question. Can we take a look at ANF, please? Okay, we can do that after the crypto. So crypto is going up sharply again. Now, if you look at the movement that we had with NASDAQ, S&P 500, Bitcoin is just reflecting the same thing in my opinion. So Hot Dog, do you agree with me that we are more or less following what has happened with the S&P 500? Let's go to the 5-minute. And I'm going to recalibrate. See, in the 5-minute also you see at around, where is this one? Where is yesterday? Yesterday 4 o'clock. Okay, here we are. This was 340 yesterday, and we saw three bearish candles in S&P 500. And all the indices. We are seeing those three candles out here. So it's more or less mirroring what is happening in the NASDAQ. So I would say that makes it even more easier. Just buy IBIT and you can track Bitcoin. No need to remember the passkeys and other things. No need to worry about your crypto wallet and other things. So that's what I'm thinking about crypto. And if I was to look at my directions for crypto, let me zoom off to the 1 day and come back. So I have got a double top target of 79,035, and my thesis says that somewhere around 80,519 is the very least at which we will come. We have already breached this once and then bounced back. I don't know if that's it or if we are going to go down further, but right now we are trying to take out all bunch of resistances out here, and the 21-day exponential MACD is almost mended itself and momentum is also picking up. So I think that Bitcoin, Ethereum, all of them are tied on the hip to the stock market, and where the stock market goes, that's where these guys will go. Ethereum is up 1.89% this morning. It nicely bounced off this diagonal line of support that we have from before. So Ethereum is looking good that way. MACD is getting mended. Momentum is also picking up out here. So friends, ANF is what I will see, and then we are winding down this session unless somebody else wants anything else to be looked at. And I'm still waiting for your feedback. You got to be sharing with me your thoughts as well, because that's why I have this channel. So guys, don't be stingy with your ideas. share it with me. So we have ANF, Abercrombie and Fitch, fashion company. I would say this is discretionary purchases. And we are looking at, let us recalibrate the chart. We are looking at MACD, which improved a bit and then it has fallen down. This, I think, is a doji candle, so moment of indecision. The fact that we didn't pierce the previous day's candle, red candle, indicates to me that the strength is not there yet. And we are in a bear channel as far as this company is concerned. So if I was to draw a line from here to here, and adjust it, a little bit of fine tuning, that's all I'm trying to do. So that's your resistance. Unless you break that, I don't think we can talk about higher highs and higher lows. So that's what I am thinking. They earned 0.93% above expectation on EPS and 1.14 on revenue. So this is backward looking. What is it that they, so I would suggest that you look at their forward looking commentary, and in the forward looking commentary, if they say things that are not very optimistic, you can expect the gains to drop and the share to stop falling. In my opinion, consumer discretionary is going to be weak and consumer staples are going to be strong. So if one was to look at the future, I think with the geopolitical risk and with the tariff talks going on and everything that's happening, the high level of indebtedness of the United States, and then the war going on in Russia and Ukraine, and the Palestine issue that we have forgotten because there is no main media news. So all those things put together, things are not looking that great. So I would say I would stay away from discretionaries. That's what I would say. Again, personal opinion, not financial advice. Aaron has said, high chance the tariffs will be nullified. I don't see how MX, C&D can sustain the damages to their GDPs. The USA accounts for around 70% for each of the total exports. This would be catastrophic. Yes, it's going to be catastrophic for both Mexico and Canada, but Trump doesn't care about us. Trump cares about his image and his dignity and those kind of things. I would say it in a loosely framed manner, because Trump wants to come out as a hero. So I think that he would he's afraid of the stock market falling. He's afraid of the housing sector falling. He's got a lot of builder buddies. All of them must be complaining to him that the mortgage rates are too high, market is soft, do something. So from that point of view, he would want the market to improve for the housing sector, and when he tries to do something to help the housing sector, it will end up helping the stock market. So more or less we are thinking in the same lines, Aaron. So I agree with you. I was just trying to link it back to the way I was thinking. So friends, thanks for joining me up today, and it's getting more interesting, and I'll catch up with you again in the next live stream tomorrow. In the meantime, I'll try to work on a few videos. I have some ideas that I want to share with you guys, and it'll come out soon. Thanks. Have a great day. Bye for now.